Hi, this is Lara from Forex Info USA with your free daily US dollar index Elliott wave analysis on the 18th of February. I'm doing this video just an hour and 10 minutes after New York has closed on the 17th, so we are analysing the New York trading session for the 17th and days prior. I have a subscription service on www.forexinfo.us for Elliott wave analysis of the euro dollar and the pound dollar. At the moment, I have a 7-day trial for just $1. The trial will stay, although currently packages start from just $10 a month. In about a week, those prices are going to go up a little. If you'd like to lock in lower prices for yourself, do have a go and check it out for $1 for a week and see if it's right for you. Having a look at the US dollar index backed for the last 10 years, starting out the analysis today, as always, with a reminder of the historical picture. It's always a good idea to orient ourselves with a historical outlook. We had a 3-wave up for A at cycle degree, followed by a 3-wave down for B at cycle degree. Now we're in a C wave up at cycle degree. C waves, along with third waves, are the strongest waves that carry the greatest distance with the greatest momentum. So we're going to be seeing some good, solid upward rises for the dollar. Now, because this is a 3, 3, 5, where B ends below the start of A, it's called an expanded flat correction, which calls for an eventual end to these upward rises at or comfortably above the top of A, which is about 122. Now, this is going to take a few years. In the next few years, we should see significant, continued, consistent dollar rises to take it well above 122. Shorter term, at primary degree, we had 1 and 2 complete. We're on the 3rd wave up of our C wave. Now, this C wave will be 1, 2, 3, 4, 5. We're in the middle of it in the 3rd wave. That's the strongest part that will carry the greatest distance with the greatest momentum because it's the 3rd wave. Our target long term, and this is going to take months, if not at least a year, this 3rd wave will equal the price length of the 1st wave when it's at 92.97. Now, that seems a little short of a target. It's probably more likely to get up to 104.58 or thereabouts, where it will be 1.618, the length of this wave 1 at primary degree, and that's a common Fibonacci ratio between these waves, especially at this higher degree. It works much better. I'm going to take you now to a daily chart just for the last 3 months, where this maroon 2 is analogous with this maroon 2. So we're looking at these recent rises for the dollar, and we see a 1, 2, and the start of a 3 at minor degree. Within that, we've already got a 1, 2, and we're right in the middle of it with a 1, 2, and starting a third of a third of a third of a first of a third. So we should be seeing some very clean, strong dollar rises in the next week or so, if this interpretation remains valid. This interpretation at the daily level is invalidated by any movement below here, 76.61. Now, our target, shorter term than those long historical targets I gave you, for the end to wave 3 blue, it's going to have price equality with wave 1 when it gets to 80.87. Now, that's much too short a target considering the unfolding structure here. It's much more likely it will reach up to 83.5 in the next couple of weeks with shorter, shallower corrections on the way up, and that will make it equal to 1.618, the length of wave 1, the Fibonacci ratio between waves 1 and 3 again. These bright blue lines are a base channel. I've taken the beginning of the 1st wave, the extreme end of the 2nd wave, created a trend line and made a parallel copy and laid it at the extreme upper end of wave 1. This channel contains price movement for the 1st wave, and when the 3rd wave is over, it will turn and come back down in a 4th wave. At that stage in the future, a few weeks away, we can expect this upper bright blue line to provide support and resistance for the 4th wave when it's on its way down. That will become useful later on. I'm going to take you now to an hourly chart where this green 2 and this green 1 are analogous with this green 2 and this green 1. So we're looking now at this recent sideways corrective movement. Before I analyse this with you, I want to point out wave behaviour from an Elliott wave perspective is very important. This is a clean, clear, impulsive move. Impulsive moves have no doubt about the direction of the trend. They are very clean and clear, whereas corrective moves are sideways and choppy. There's doubt about, is it going up or is it going down? Here we see again a very strong, clean start of possibly another impulsive move. We probably have an end, therefore, to wave 2 here, and apart from a throwover in this B wave position, it's nicely contained in these parallel lines of this trend channel. Corrective movements, another feature of them is they're nicely contained within parallel lines. I've joined the end of wave A with the end of wave C, created a parallel line and laid it from the beginning of wave A. Now, because this is an expanded flat with a 3, 3, 5, B has ended beyond the start of A. Usually that means that C ends further down and is quite a lot longer. In this case, that isn't the case. However, yesterday's post had a target for C, was given as 79.66, where it equals 1.618 the length of A, and it also comes nicely within the 0.5 ratio corrective of this whole previous upward structure. It's just 0.08 below that target given. It ended there, and it's had some very clean, strong upwards movement. This may be the beginning of our third wave, of our third wave, of our third wave. However, until it breaks confidently and strongly and stays above this upper green line here, I'm going to be cautious and conservative and say that we still may be in a corrective movement, and it could be the tracing out of a more complex double or triple 3. That is still an outlying possibility, and we won't have confirmation the correction is over until we have clean movement above this line. I like to be very conservative in trading. Considering Forex is so risky, that's probably a good thing. So we have some very clean targets. I have an invalidation point at the hourly level. We should see no movement below 78.69, further back down here. So we have clean invalidation points, very clear targets, short, mid and long term. The next 24 hours should see a continued dollar rise, and it should, according to this wave count, be pretty strong. It remains to be seen if that's going to be borne out. Again, if you would like this kind of Elliott wave analysis to use in your trading on the euro dollar and the pound dollar, check it out and lock in those lower prices before they go up. Thank you very much for watching. As always, have an awesome day and may all your trades be profitable.